Hello, everyone. I run a podcast called Dividend Go-Getters. This is episode 1 that I'll be doing on the podcast. And in this episode, I'm going to give you an insight on my main portfolio, which is my dividend portfolio, and show how I run the portfolio and how I have it set up. And it will give you it should give you a good image of what, in my opinion, is a well-run dividend portfolio. Stay tuned. Alright, so one of the first questions I get asked is, what broker do I use? And I actually use two brokers. One of them, which has my main portfolio on it, which is M1Finance, and the other one would be Robinhood. So a lot of people already know what Robinhood is, but not a lot of people know what M1Finance is. So M1Finance is just a regular broker like Robinhood. However, they have everything set up differently. Whenever it comes to a dividend portfolio, a lot of people that run dividend portfolios are looking for passiveness. And Robinhood, in my opinion, doesn't have that passiveness set up yet. They are starting to get there. They're implementing a few things like fractional shares and other things like that. But M1Finance has a system set up to help dividend investors like myself to make everything passive. And when I mean everything passive, make the investing process passive. So, for example, if I throw in $700 one month, I can set the amount of $700 to be automatically invested in a future date that I choose. So if I wanted to invest $700 on Tuesday and it was the week before on Friday, and I deposited the $700 then it would go ahead and automatically invest on Tuesday without me having to do anything. And that's really, when it comes to passive investing, especially when you start to have everything set up automatically to have automatic transfers going straight into the account, it can get really, really passive. So to sum that up, M1Finance is the main broker that I use. That's what I use for my passive income portfolio. And Robinhood is what I mainly just use for speculative investments, growth portfolio, and any options trading, because M1Finance does not have that feature of options trading right now. So how long have I been using M1Finance? Well, I actually just started investing around 2017. And in that time frame, I got really, really big into cryptocurrency. And lo and behold, it didn't turn out so well. I still have a little bit invested. However, there is a little mishap that I had earlier where my bank account, which was connected through a very popular cryptocurrency website, was actually hacked, and they ended up withdrawing a lot of money from my account, which didn't turn out so well, but over time it actually worked itself out, and I didn't lose any money. So since 2017, which is 3 years, it is July 2020 right now, so it's been about 3 years that I've been investing. And it wasn't until last fall that I actually transferred all of my, or not all of my money, but most of my money from Robinhood over to M1Finance. And why did I do this? Well, for the exact same reason that I said earlier, is that M1Finance gives the opportunity for a lot of investors to set up truly passive income investments. Truly passive investing. So I initiated the transfer from Robinhood. Robinhood actually has a out of transfer fee, meaning money leaving Robinhood is going to get charged a fee, which at the time is $75. I believe it's still $75 now. However, a little tip for you is a lot of brokerage companies want your money to be in their brokerage. That is how they make money. A lot of times, if you just contact the support system, which is what I did for M1Finance, they will actually waive that fee for you, or they'll pay the fee on the behalf of Robinhood or the other brokerage that you're exporting your money from. You can think of it like a credit card. Some credit cards have bonuses that you can pay for in order to entice people to apply for that credit card. And it's really just to keep people in the door to continue using the platform. And that's exactly what a lot of other brokerages do as well. a lot of other people, they'll take that fee into account and they'll think, should I sell this? Should I sell all my stocks and just rebuy them into M1Finance or the other brokerage, or should I actually transfer it? Whenever you do sell something, that initiates a taxable event. It really gets complicated on the decision that you have to make for it. However, like I said earlier, you can contact the support a lot of times for these other brokerage companies and ask them to pay or waive the fee that it would take you in order to export your money from another brokerage. So the next topic I'm going to go into is, how do I have my pies set up? Right now I have $34,728 invested in my main passive income portfolio account. I have a cash balance of $6,750, and that cash balance is what I use for a lot of manual purchases. What do I mean by manual purchases? Well, when I set up the account, I always have an automatic payment going from my bank account to M1Finance every week. And every Monday, that amount is invested into my portfolio and it goes to the cash balance. That amount then comes out the exact same day and is automatically invested into all of these different slices, which M1Finance calls pies. Now, these pies, I've actually allocated a certain percent of money that I want to go into each slice of pie. For example, I have a slice called technology, which is what I keep all of my technology stocks in. So I have the target amount set to 8%, and right now it's at 9.3%. So I have more money invested in technology right now than I want to actually have invested, or that I have set that slice to invest money in. So the next time M1Finance automatically invests for me, that money is not going to go to that slice. It's going to go to a slice that is under-allocated. One of the slices that I have under-allocated right now is the healthcare slice. So I want my healthcare slice, 8% of my money to go to be in healthcare, which is what I have it set to now. Right now, only 6% of my money is set to healthcare. So the next time I invest money into M1Finance, M1Finance is going to see that money and see that healthcare is under allocated. So it's going to divvy up proportionately that amount of money to healthcare first, and then it will head to technology. Only after the percent or proportion is equal, if that makes sense. And that's how M1Finance has their account set up right now. Or that's how I have my M1Finance account set up. Now, going back to earlier, I mentioned that I have a cash balance here that I use for manual purchases. Like I said earlier, I have an automatic investment going from my job. They pay me, which goes to my bank account. And then from my bank account, I transfer it automatically to M1Finance. And then M1Finance automatically invests that money into all of the little target portfolio pie slices for me. But what do I do with all this extra cash? The $6,750. What do I do with that? Well, the money I use that for is for manual purchases. And what do I mean by manual purchases? And basically, when I see a good buying opportunity, I can go into whatever account that I want to go into, and I can put in a manual purchase on anything that I want. So if I wanted to buy a little bit of Packaging Corporation of America, I could go in there and press buy or sell, and I could buy it. I would enter the amount that I want to buy, and then M1Finance will take that amount from my cash balance and manually invest it for me. Now, what is a trading window? Now, a trading window, as far as I know, is only something that M1Finance does. So this means that you can't, unlike other brokerages, you can't just invest whenever you want during a day, during a trading day, within the trading day, or what is called trading intraday. Now, M1Finance has it set up to where you have a specific set of time during the day, which is 9 a.m. right now. If you don't pay for premium, it's 9 a.m., that they will automatically invest for you. Now, even if you set up a manual investment, like I explained earlier, it will only trade at that 9 a.m. window. So if you set that trade at 12 a.m., the trade will not go through until the next day at 9 a.m. Now, if you set that trade at 12 a.m. on a Tuesday, that trade will not go through until 9 a.m. on Wednesday, the next trading window. Now, you do have the option to pay for Robinhood Premium, which gives you 2 windows out of the day. I believe it's 9 a.m. and sometime later in the day in the afternoon, but I'm not entirely sure what time it is because I don't pay for it. Now, going over a little bit of the slices that I have set up in my pie. I have one slice in particular that I use just for funds. Now, these funds, the funds I have right now are Vanguard's High Yield Dividend Index Fund and EFAS, which is a global super dividend fund, which invests in a lot of global securities. I do not suggest EFAS as well. When I first started to invest in 2017, EFAS was actually one of my first purchases that I ever made. I invested $5,000 in it. I really didn't know the consequences of what I was getting myself into. I saw a really high yield and I saw that they paid monthly. And so I went for it, which later on you learn down the road is not the right thing to do. Now, all the slices in my pie are really set up into different sectors besides the fund slice. Now, all of these different slices hold 2 or 3 or more different securities in them of stocks or companies that are only in that sector, and that sector is broken up in each slice. So if we look at the healthcare slice, I have 2 investments. One is in AbbVie, great company by the way, and the other is in Johnson & Johnson. Now AbbVie, I have it set up for 70% of my investments to go into AbbVie, and the other 30% to go into J&J, Johnson & Johnson. So you can also look at each individual company as its own slice as well. So I have the target amount, which is the amount of money that I want AbbVie to be worth in my portfolio, and then there's also the actual amount that it shows. So to make that clear, if we go back to the healthcare slice, 8% of my money is going into the healthcare slice. If we click on it, within that same slice, 70% of that money is going to AbbVie and 30% is going to J&J. So the more and more companies that you have, the smaller and smaller percent of each company you're going to be able to own with the amount of money that you have. Now, my healthcare slice only has 2 companies in it. Let's look at one that I actually own a couple of more companies in. Now, one that I actually own a couple more companies in is in my financial services sector slice. In my financial service sector slice, I own Bank of America, Houlihan Lokey, and Great Elm Capital Corporation, or GECC. Now, just like EFAS, GECC is another company that I ended up buying. I made a big decision off of seeing a really high yield, which was a bad idea. Luckily, I did not put as much of my cash position into GECC as I did into EFAS, but I am down 44% on GECC right now, as compared to Houlihan Lokey, which I just made a purchase of $500 literally last week, is already up $10. So this goes to show that you really can't look at the dividend yield in order to make you money and in order to make you wealthy in the long run. So that concludes the first look at my portfolio and how I run the portfolio on a daily basis. So I hope you enjoyed it. I do have an Instagram channel. It's called Dividend_Go-Getter. Go ahead and follow it. On this Instagram, I post a weekly update of every single trade that I make. My biggest gainer, my biggest loser. If you have any questions, go ahead and let me know. I am down to talk to anyone about anything financial related. And again, I would like to thank everybody for listening today. As a closing disclaimer, I am long all of the companies that we talked about today. I am not a licensed financial advisor. The information said today is not financial advice. Investing in the stock market involves risks, and with risks, there's always the possibility of losing money. Thank you, everyone, and have a good day.